Hello, everyone, and thanks very much for joining us ahead of the ESG Investment Europe Virtual Summit. My name is Simon Jessop, and I'm Reuters Chief Correspondent for Sustainable Finance based in London. It gives me great pleasure to introduce my guest, Amit Bouri, Chief Executive Officer of the Global Impact Investing Network. Amit, for those who don't know you, maybe you could start by giving us just a brief overview of GIIN's origins and its mission.
Absolutely. First of all, I just want to say thank you so much for having me. I'm really excited to have this conversation and, of course, for the event that is unfolding. So the Global Impact Investing Network, or the GIIN for short, is a nonprofit organization that's focused on moving more capital to projects that have a high impact on social and environmental issues. So if you can imagine a world where finance plays a critical role in helping increase access to things like financial inclusion, sustainable agriculture, clean energy, and helps overall to support a more inclusive, more sustainable world. The GIIN is focused on creating that world. And I have the pleasure of having been involved in the founding of the organization and lead it today.
Thank you. Obviously, a key focus of the conference is going to be how to better embed good ESG practice in the wider asset management industry. Could you maybe talk a bit more about your work with mainstream investors particularly? What can they learn specifically from the world of impact investing, but also through your broader journey?
Well, I think we're at a moment where we see a lot of inbound interest from mainstream investors, who are trying to understand how their portfolios interact with big global issues like climate change, inequality, and the Sustainable Development Goals. What impact investing offers to mainstream investors who are trying to think about these big issues is that impact investors have been honing a discipline of putting capital to work to achieve their financial objectives alongside social and environmental impact. So there's a lot of experience about how you integrate impact into the entire investment process, from due diligence to portfolio management, all the way through to exits. And there's a growing discipline around how you measure and manage the impact of your portfolio. As we zoom out and think about what the world in which investors are operating today, increasingly there's an expectation that investors are thinking about the impact of their portfolios on a variety of stakeholders. What's the impact on the planet? How is it supporting healthy communities? How is the portfolio helping to address racial equity? These big systemic issues are so important, and the private sector has so much to answer. And impact investors can contribute the discipline of translating those impact intentions into real impact results.
Thank you. I mean, you mentioned there a couple of the sort of the headline areas that you can maybe help liaise with mainstream investors on their journey. I mean, decision-making process, auditing. Could you maybe now, from your view, how far along on that journey are we, and what does good and bad practice look like in that context?
Well, I think if we look back, there's been such a huge leap forward in progress when it comes to investors thinking about environmental, social, and governance factors. But I think we're in the midst of a shift, which is a very powerful shift. I think the origins were very much oriented around compliance, like how do we just disclose the minimum amount of data that's expected of us. But now it's shifting more towards how do we actually think about driving performance. So how do things like your climate footprint, your diversity of your workforce, your social policies, and the employment practices that you have in place, how do those actually help you mitigate risk and drive greater performance? And I think that's incredibly energizing because that starts to speak the language that most investors are used to speaking, which is how do I manage my assets in a way that help to drive greater performance across any number of dimensions. Now, of course, now that we're adding impact and ESG as a dimension of performance, the question then it comes to how do we actually integrate this into the investment process? You asked about bad practice, and I think a bad practice would be to just tack this onto the side. So to keep the kind of machinery in place, the status quo, and then try to understand your ESG as kind of a parallel effort. The best practice is really how do you integrate these considerations of impact, environmental, social, and governance factors into the actual machinery of the investment process. And that's where I think the true potential, can really be unlocked. And also, what is really core to, having really effective ESG management practices.
Thank you. I mean, obviously that ESG integration piece, it's very hard to see from the outside looking in how successful or otherwise that has been. It's very easy to say we've integrated this across all of our investment teams. When you speak to asset managers, how confident are you that the average asset manager that says they do into ESG integration is actually integrating it in a good way, in a solid way, rather than just a greenwashing way?
Well, I think we're in the midst of a transitional period, where we are starting to see uptake of ESG practices really take off. But I do think there is a big issue around greenwashing, as you put it. We often use the term impact washing at the GIIN, and we have found, we did a recent survey of impact investors globally, and found the top concern that they had when we asked them about challenges to the progress of their market was the risk of impact washing. So this is a huge issue. We believe that what's so critical is to integrate integrity into the entire process. And for an investor that's scrutinizing asset manager, what they should be able to ask is, can you demonstrate not just how you report on ESG, but how this is integrated into the entire investment process? How does this show up as you evaluate investments? How does it affect the way that you manage portfolio? And does it affect your decisions around what you do with your investments? And that's where I think the rubber really hits the road. Is this influencing decision making? Because that's when it's not just about tracking information, it's about making sure that information matters to how the investor conducts themselves. And I think that's where you get the shift from PR and the wrapper of impact or ESG to the real substantive ESG driven investor.
And what sort of things would really typify for you an asset manager that's truly integrated and is acting in response to that integration?
Yeah, well, what I'd want to see is just how they are taking up market standards and how they're incorporating those into the investment process. I think it also can show up in how they actually just conduct their investment management process. All the way down from the analysts who are evaluating opportunities through to the C-suite. We often find that this can get stuck at one level. So you may have senior management that's really engaged, but it hasn't worked its way into the way that the full staff is operating, or vice versa. I think what's critical is to be able to see not just these pledges and promises, but really the commitment to driving impact and ESG performance. And you'd asked me about some of the bigger issues. I think that's one thing I'd highlight in this moment that's incredibly dynamic in the world, is that we are seeing growing distrust and cynicism, as a result of the pandemic and the financial crisis that's ensuing. And I believe that investors and companies can help rebuild that trust, which is so critical to our social fabric, by being able to demonstrate real integrity when it comes to how they think about ESG and impact.
Thank you. I mean, you mentioned there obviously the COVID-19 pandemic. Governments are talking about building back greener. How are investors responding to that in your view? How much of an opportunity is it for them? Yeah.
Well, I think that it's this is an absolutely critical moment for us to really reflect on the way we've been investing and what's been working and what hasn't been. I think one of the things this pandemic has done is really expose inequities in our system, cracks in the system that we had in place. We're seeing issues around vulnerability of supply chains, how workers are valued and supported through not just through good times but also through downturns. And these are becoming front page headlines about how companies are grappling with their public profile as it relates to how they handle a lot of broader societal issues. Right now we're in the midst of the crisis and we're still trying to figure out how we're going to come out of this. My hope is that soon we are really focused front and center on the recovery, that we feel like we've got the crisis under control, and it's going to be a very protracted process to build back better or build back greener. But that also presents a massive opportunity. And that opportunity is that investors will be focused on how do they find great opportunities from a financial perspective. but how do they also play a role in building back their communities, whether it's the places where they're based, entire countries, continents, or global investors obviously have a global footprint. And I think this is a moment where we're seeing a lot of kind of pledges and promises coming from companies and investors. And the conversation we're having now around ESG integration and impact performance is really about how investors and companies can demonstrate real progress and real performance on the things that society will be expecting of them as part of this recovery.
Thank you. And how important rather is it for collective action in this context? I mean, there are a whole number of initiatives out there across a whole range of topics, but there are some houses that just don't get involved at all. I mean, how important is that for you, particularly given the fractured nature of the shareholder registers of most big listed companies?
Yeah. Well, this is a really critical question for us, and it's a very important part of the GIIN strategy. We're a network for a reason, and that is because we believe in the power of collective action, and that it's not going to be single investors or single companies that may have enlightened leadership that will get us to a more inclusive and more sustainable system. We absolutely need broad-based engagement, so we need to change the way that every investor is operating. And we also need to honor this shift in society where we're seeing a clear social mandate for money to do more than just make more money. What we focus on is helping investors figure out how to actually put those aspirations into practice and how to do so in a way that drives real performance. And I think that is an incredible opportunity for the moment we're in now. And we are seeing kind of a groundswell of interest from major asset managers, from asset owners, pension funds, insurance companies, and others, kind of clients or LPs of many of the fund managers who will be asking, how will this investment help us contribute to issues like climate change or driving a more inclusive recovery from this pandemic. And so I think the market signals will be coming from all sides, and there's a real opportunity for investors, to step up and meet the demand that we're seeing on the horizon.
Thank you. The EU is obviously readying its taxonomy, seeking to define what counts as sustainable. How concerned are you about regulatory divergence across the globe, particularly in the States, I guess?
Yeah, well, I think one thing that we're seeing is that as regulators see the need to drive more systemic change around issues like sustainability and inclusion, that they will be taking more action. One thing that investors and companies always struggle with is fragmentation when it comes to regulatory environment. But I think a lot of the work that's coming out of the European Union will set the tone, for for business activity outside of the EU as well. I can't speak to predicting what will happen in the U.S. around policy and politics, but I certainly do know that many investors in the U.S. and in Canada and Australia and elsewhere are moving towards a greater focus on sustainability and impact. And so that we'll see the private sector continue to drive this and hopefully can inform really sensible, pragmatic regulation that'll make sure that we have a level playing field and clarity for businesses, investors to operate in a way where they can focus on the right metrics and the right performance on a global basis.
Great. Amit, it's been great speaking with you today, but unfortunately that's all we've got time for. Thanks once again for joining us, and to our viewers, I hope you enjoy the rest of what promises to be an insightful event. Thank you.
Thank you so much for having me.